Rajiv Batra is with us. He's of course, with JPMorgan. Rajiv, great to have you with us here. Thank you very much for your time. Appreciate it. Prashant this side. You know, I'm looking at what your note says, and I'm sort of just read out this portion of for our viewers, because this is the operative part. What you're saying is, we worry that such rapid market declines, and you're referring, of course, to what we saw in the Japanese market and, you know, all of the volatility last week. You say, and I quote, "We worry that such rapid market declines often lead to unexpected ruptures in the market, from spillovers and cross-asset volatility, dispersion, and private markets to at least margin calls, and any bounds here may not sustain far until we arrive at a new market structure equilibrium." So is that the operative part, Rajiv? Is that kind of sort of in one line the view that you're sort of telling your clients when you're speaking with them?
Exactly. That's what we have been expecting for the second half. So when we wrote the outlook note start of the year, we said to our investor that first half, you will be able to make a good set of a return. Market may operate in a Goldilocks period. And hence, we have seen Asia ex-Japan index operated in the base case and the bull case territory for us. But we knew as we head into the second half, if the positionings are overcrowded and going into one of the biggest event of the year, US election, there could be some round of uncertainty, even in terms of if monetary policy regime is also shifting from tightening to easing. That's what we exactly saw over the last 1 month, where middle of July, due to the tech earnings season weakness in the US, we saw the first bout of the volatility. And now, last week, the second bout of volatility hit due to the carry trade unwinding and the rising US recession risk. And we believe this bout of volatility may need to continue because of either the geopolitical uncertainty, the activity data which is weakening in the US, and maybe even because of some exaggerated or overcrowded positioning in the equity markets too.
So how would you suggest one play this extended period of volatility up until at least the events get out of the way, Rajiv? You know, what are your sector calls, and what are you suggesting investors do to protect themselves from such sort of volatility?
So the prudent measures would be, rather than taking the clear country or a sector call, people should take call within the sectors and more on the factors or the style basis. So the styles or factors which have not done well so far this year, as an example, low walls, quality, or even defensiveness, that's what should be the key part of your portfolio, because in the next month or two, when the volatility swings will keep on happening, the low wall or quality exposures, or even a marginal sustainable growth exposure will help you safeguard your portfolio and prep you up for a possible year-end rally also. But till then, capital protection is utmost important.
All right. Hi, Rajiv. Good morning and good to see you. And you know, the big story here for most Indian investors is we are cheering the decoupling. The globe will fall, but if it falls, we'll fall less. And if it goes up, we'll go up more. That's what we believe, at least. But at current valuations, what's your view on the Indian markets? You know, a lot of challenges have come about. We didn't get an absolute majority of the ruling government. We got a tweaking in capital gains, but still the market's just 2% away from fresh all-time highs. Your comment on this?
No, so definitely, if you look at the trade over the last month or so, when the global volatility is happening, domestics are faring far bit better. So be it India, be it Southeast Asia, ASEAN market, or even if China, the more you have a domestic exposure, the better off you are. And this is the reason why when markets are declining, these domestic exposures are outperforming. Even based on the feedback from investors whom I'm been talking and traveling and meeting last 5 weeks, have been very clear that they need to increase their exposure substantially towards the domestic haven, that is more South Asia part of the world compared to the North Asia, because of the gyration they are expected to see in the economic data prints in the North Asia side. Coming back to the India, yes, definitely valuations are expensive. And after a bout of inflows, which we have seen post-election result, there is a merit that market could take a breather before again start inching up higher. So tailwinds, positive tailwinds which were there in place, like earnings, budget, or even continuity of policy, that tailwinds are now coming to an end and headwinds are approaching. So seasonally, if we see September 8 out of the 10 years is a weaker month for India. Besides that, earnings, if you will look this quarter, have been lackluster on sideline, in line with what everyone expected. And then most obviously, state elections are approaching, which can make people think or have a deja vu of the last year, where going into the state election, markets were on the sideline. So for India, relative terms, we could be still an outperformer, keep on doing well. But absolute term, we will be in a range-bound state.
Speaking about range-bound, there is no dip in Siemens, which is not bought. In fact, this stock opened mildly in the red. Vamakshi did tell us that there was weakness in their mobility business margins, and that dip has been swiftly bought into. The stocks recovered about 3.5–4% from the lows, stock back above that 7,000 mark, and has moved higher. It's already seen a big move, almost 75% from the start of this year. Not particularly comfortable when it comes to valuations as well, but maybe the street is eyeing some more in Siemens going on from here on, and that explains why the dip on that stock has been bought into.
No, absolutely, and there's a fair bit of interest in some of these names that we have been talking about, and that continues. Sun TV is down. Sun TV is down 8%.
Yeah.
So stocks at about what, 842? That's a large cut that we're talking about. It closed at about 916, 917, at about 842 at this point in time. So it's basically been pushing lower from the word go, although it's just still about 10 minutes or so as far as market open is concerned.
The problems are on the margins. The margins, 500 basis points contraction on a year-on-year as well as on a sequential basis.
Yeah.
Top line was okay, but I guess that's one of the reasons. It's not as cheap as it was. I think 2.5 months ago, it was at around 650 rupees odd. So at that point of time, the core business, I think you were getting it at around 4 times EV on EBITDA. X of the cash, X of the IPL franchise, if you put a value to that. So now it's not as cheap. So I think the room for, in terms of that valuation comfort went out. I guess that's why the stock is getting pulled back.
Room for disappointment is zero.
Very, very minimal.
So, I mean...
But some of these Adani Group stocks actually have come off the low point of the day. Adani, some of these, Adani Total Gas as well, it's come off a little bit from the low point of the day. I think Adani Enterprises as well. So, yeah, that's the frontline name. Let's pull up Adani Ports as well. So, some bit of recovery from the day's low. Adani Energy Solutions, we had highlighted that there was a big difference, between both the rates. So recovery on one of those groups that are in focus today.
I think, that's absolutely right. Astral is another one I want to highlight. Again, one of these names, again, first quarter numbers were nothing great. We spoke with the management on Friday morning. From 2,500 stocks down to 1,950 or so very quickly. Last 10 or 15 trading sessions is more like it. So there is, price damage occurring on a wide wide swath of stocks. Midhani, which is Mishra Dhatu, I think there was massive compression in margins here. So high was 540, 550, stocks at about 420 now. Although today, from the day's lowest point, is actually trying to come back up a little bit. Zydus Life is another one, has had a one-way move higher. But it's kind of I think, faltering a little bit in today's trading session. For the year, it's up 80%, Zydus Life.
I think even Stovecraft, we had the management. When you had TTK Prestige, it didn't grow, and Butterfly Gandhimati actually gave a degrowth. Yeah. They grew a little bit, and they're promising better times ahead. They've disappointed in the past, but for the time being, Stovecraft is up close to around 6%. So the street will eye delivery, because actually the stock is still, I think, not made the high that it made when it post-listing. So it's still a distance away from there.
Absolutely. It's been one of those underperformers in a market where there's not very many underperformers, the outperformers. Rajiv, from a flow perspective, right? What does all of this, the spike in global volatility, etc., mean for India? The market here in India has been driven almost entirely by local investors, right? And that is the bid under this market. Over the last 3-4 shocks, some mini, some slightly more than mini, the election, the tax change, the recent yen episode, market from high to low, the Nifty fell just 4.5% in local currency terms, the least amongst major markets. The question, though, is, does this delay, when foreign investors come back into this market, what's happening globally? What's your sense?
Definitely, local investors are not going to be an issue. We continue to expect domestic keeps on buying into the equity market, looking at their balance sheet exposure, which are still quite low on the equity exposure side. So domestic inflows we expected to continue through SIP, lump sum, and NFO kind of a route. Talking about the global investors, it was very interesting during the budget time while I was in the US. Investors were disappointed to see that during the budget day, there was not a deep correction because everyone was looking for correction to buy, was planning to buy into this correction or a dip of a budget if that would have happened. So what foreign investors are looking like, if any dip comes in India at a single stock level or at a sector level where the value is emerging, they will be buyer into that. And if you would have seen since election and take last 1.5 week out, there was a period we got close to $9 to $10 billion of inflow in Indian equities. That is an evidence that foreign investors are more than happy to cut down their underweights on India, go towards a neutral kind of a territory, but want to pick up sectors or stocks where value has started emerging. So that provides another set of a confidence to the investors that even in case if India is declining, a lot of money is still waiting on the sideline to enter into Indian equity markets.
All right, take that point. A lot of money is waiting on the sidelines to enter the Indian equity markets, and that seems to be the order of today's trading session so far as well. 15 minutes into opening now, we have the early rates which have settled in. The Nifty has actually recovered a fair bit from the lows, and the mid-cap index, that's really been the star of the morning so far. At one point was down by almost 0.75%, now down by just about 100 points, a tenth of each. And the story would also be clearer if you look at just the advanced decline lines of the last 15 minutes or so. When we started out, we had nearly, 3 stocks declining for every stock which was advancing. That moved on to closer to 2. And now those lines have come perilously close to each other, just about 1,000 stocks advancing for about 1,300 stocks which are declining. So if the mid-cap index does recover, that tells you that maybe we're out of worries. A lot of these individual stocks surging. You have Trent, which has now made the highs of the morning. Apart from that, we're seeing increased traction on Coromandel. It was, I think, Sudarshan's 9 a.m. pick. So just pull up Coromandel International as well. And then you have names like Granules, Metropolis. The paint space, that's done well too. We had Berger Paints report numbers on Friday telling you that they saw the maximum amount of market share gain in a quarter this time around in the first quarter. That stock's done extremely well. Asian Paints too is out of the woods now, currently in the green. A lot of these cash market stocks seeing bigger moves as well. Real estate sector, we have Macrotech Developers up around 5%, Parag Milk up around 5%, Allied Blenders up around 5% as well. So we'll keep an eye out on the broader markets. Now seems like we've seen some bit of recovery from the lows, the broader markets recovering faster.